Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of May 6, 2013. Hello, I'm John Thomas from Primary Residential Mortgage here to give you your update. Well, last week we saw mortgage rates hit all-time record low again on Wednesday, May 1st, but then on Friday, May 3rd, the bond market sold off on a better than expected jobs report, so mortgage rates did jump sharply higher on Friday. Still at all-time record lows, but not the lows you were seeing the week before and what we saw on Wednesday. So let's look at the bond chart on the screen. What you can see is mortgage bonds were on this upward trend, hitting an all-time record high on Wednesday, pulled back a little bit on Thursday, and then that huge red candle on Friday. That's the jobs report came out. Mortgage bonds sold off. Stock market rallied, took out another all-time record high at 16,000. And you can see the trend is now downward for mortgage bonds. Now, with that being said, we were able to hold at the 200-day moving average. So with that holding, we are going to recommend cautiously floating your Delaware mortgage rate to start the week to see if the 200-day moving average can hold. If it can, you're okay floating till you get closer to your closing date. But if it does break below that 200-day moving average, we're going to quickly switch to a locking stance. So let's look at that jobs report. The Labor Department released the April 2013 jobs report on Friday. Came out better than expected, which fueled the stock market rally. They reported that we had 165,000 jobs created in April, which was above the expected 155,000. We also saw that they revised the numbers for March and February, which added another 114,000 jobs. So the April jobs report also showed the unemployment rate dropping from 7.6% to 7.5%. That's the lowest reading since December 2008, and that's down from the high of 10% unemployment rate reached in December 2009. So all in all, this looks like good positive economic news, fueled the stock market rally, pulled money out of the bonds. And then even on Thursday, we saw weekly initial jobless claims released, and that came out better than expected at 324,000 claims. That was below the 346,000 expected. So all that good news fueled the stock market rally. But if we dig into the numbers, it's not as good as everyone thinks it is. First of all, most of the jobs were added were from the bars and restaurants, retail, and professional service sector. Those are not long-term jobs, and they're not jobs that are going to be high-paying jobs. So the jobs that were created are not the ones we need to sustain a long-term career path. And the unemployment rate dropping to 7.5% did not drop because people went back to work. It dropped because people stopped being counted in the calculation. And we can see that if we look at the labor force participation rate, it stayed the same at 63.3%, which is the lowest it's been since the 1970s. That is a calculation of everyone that's 16 years or older that's eligible to work. Calculate what percentage of those people are actually working. That 63.3% of eligible workers are actually employed. So not great numbers on the employment front, even though the jobs report looked like it was a good report. So this shows us we still got a way to go on the recovery. And then in the Federal Open Market Committee met on Tuesday, released their findings on Wednesday, and they basically said that since inflation is remaining tame and that the economy is still sputtering along, they're going to keep the Federal Reserve buying program in place until all throughout 2013 into 2014. So what does that mean for us? That means mortgage rates will stay near the lows throughout the year as the Feds are buying $80 billion worth of bonds and treasuries. $40 a month, $40 billion a month in mortgage bonds and $45 million a month in U.S. Treasuries. That is what's keeping these interest rates really low. So that's good news for interest rates. In the housing market, the Case-Shiller 20-City Home Price Index for February 2013 showed a 9.3% increase in prices from February 2012. That's the largest annual gain since May 2006. And this report again shows that the housing market is recovering. Home prices are on the rise. We actually have a shortage of inventory, so there are multiple offers going on. So it is a great housing market. Low rates, home prices appreciating, great time to buy a home. Now, in the local news, the next free first-time homebuyer seminar is Saturday, May 11th. That is at the Christiana Hilton Hotel in Newark, Delaware, and that's from 10 a.m. to noon. You can register for that. Give us a call in the office, 302-703-0727. The next one in Dover is Tuesday, May 21st. And that's from 6:30 p.m. to 8:30 p.m. at the Dover Sheraton right there on Route 13 in Dover. You can register for either one of these events by giving us a call in the office, 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.